Hey everybody, Josh here with the Rage Real Estate team with another market update. Today we're talking Shift Part 3. The previous two videos we talked briefly about what Shift was and what we are expecting for this fourth quarter as we enter into the fall and winter months. And we've talked a lot about this. We've talked a lot about what Shift is. And today we just want to highlight for the last time what we're looking at and whether or not the market indicators are following our predictions according to market shift. So what is seasonal shift? It's a seasonal adjustment to the real estate market based on the relationship between supply and demand. And what does it look like? First, we should see increased inventory if we're experiencing a seasonal shift. We should see fewer buyers. We should see less aggressive bidding wars. And we should see more price reductions. If we're seeing those four things, it's not cause for alarm. It just tells us that we're entering into a season of shift, and it's normal for Denver. So first, this slide here shows that when we talk about low inventory, it doesn't necessarily mean that there are less homes to buy. Actually, what this shows us is there are more homes to buy than we typically see. Right now, we're sitting at about 45,000 home sales for the year. Denver normally sells about 50,000 homes a year. That's the Denver metro area. We normally sell about 50,000 homes a year. And this year on pace, we're on track to sell about 60,000 homes, which is actually an increase in inventory. So it's not necessarily that there are fewer homes to buy. It's that they're not staying on the market long enough to even be counted. That's what this graph shows. So right now, in our average daily inventory, we're hovering at about 3,500 homes. Now, average daily inventory requires a home to be on the market long enough to show up in stats. And what's happening is when homes hit the market, there are so many buyers out there that they're snapped up and put under contract before they can even register and be counted. So if you look 2 years ago, we had over 10,000 homes in our active daily count on the market this time 2 years ago. Last year, that number dropped. And this year it has dropped again. Now, at 3,500, we're actually up over earlier this year. In the spring of this year, our average daily count was down to about around 1,000 homes. So we're up 3,500, which we should be if we're experiencing a seasonal shift. And what we expect to see as we head into October, November, December, is that number actually climb a little bit or plateau as homes stay on the market long enough to be counted. This graph here shows our increased inventory. Again, in the spring showing we're down 1,900 homes. Now we're up to 3,300 homes. Another stat that we talked about, or another mark of a seasonal shift, is we should see fewer buyers. So our showings decreasing, and that again is true. We peaked out around 30 to 40,000, depending on which month you look at, this spring and summer. Now we're down to about 22, 23,000 showings overall. And so showings actually are down. Another indicator that the market is going through seasonal shift. And then our bidding wars are getting less aggressive. Now, once again, this does not mean you can expect to go out and offer $10,000 below list on a home. So don't get that excited. But we're down from the average home going for 106%, 6% over list price, down to about 102%. So that's decreasing, another indicator that we're experiencing a seasonal shift. And then are we seeing price reductions? We should be seeing an increased number of price reductions if in fact we are experiencing seasonal shift. And in fact we are. In June, only about 7% of homes listings were reducing their prices, which is pretty typical. Now in October, we're seeing almost 22% of homes reducing their prices. And we typically see that this time every year. What are home prices doing overall? In our attached supply, condos, townhomes, they're up year over year about $60,000 on average. And our detached supply, detached single family homes, are up about $100,000 year over year, which is substantial. Almost 15% appreciation that we've seen over this past year. Now, a healthy market typically appreciates at a rate of around 4 to 6%. So as excited as homeowners are that they're making that kind of money, 15% on their investment year over year, that's great. It's also not sustainable. So we don't expect those numbers to continue. In fact, we could be at the beginning of a longer term shift, which remains to be seen, where it's actually a shift toward health, not a shift towards a crash. So what does this mean for home buyers and home sellers? If you're a buyer, the fourth quarter can be a great time to buy. As we saw, homes are lasting on the market longer than they were earlier in the year, which could mean that you don't have to go as far over list price to get a home, which is great news. And you've got a much better chance now of finding a home that you love, getting your offer accepted than you did back in March. So jump back in the market. Sellers, follow the future data. As we are pricing your home in the fall, we can't look back to the spring at what homes were selling for and say, well, in March, they were selling for 6% over list. So let's just assume we can get that again this time. We got to be very strategic in how we price your home in order for it to sell. And the good news is we can do that. We know how to do that. And then investors, inventory is on the rise, and it could be a great time for you to scoop up a property that may have room for you to update it or may have some minor things that you can fix in order to make it a great rental. So if you're an investor, talk to us. We'd love to help you put a plan together. That's it for our update. Thanks for watching. If you got any questions, feel free to reach out to us anytime.